the bank that reshaped a kingdom. It began with a promise that sounded almost unreal, a quiet pledge whispered in counting rooms and royal halls alike. Wealth would no longer depend on land or treasure alone. It could be created, moved, and multiplied by men who understood the currents beneath a nation's surface. To understand how a single bank altered the fate of a kingdom, we need to return to an age when Europe stood on the edge of transformation. Monarchs still ruled by divine claim, yet their power rested on fragile finances. Armies marched, empires rose, but behind it all was a constant struggle: who controlled the flow of money, and who could command it when the world shifted beneath their feet. That struggle remains alive today, echoing through every modern financial debate, every quiet policy change, every crisis that catches us off guard. Because the pattern that once threatened a kingdom still repeats, reshaped for a new era. The story begins in a capital hungry for expansion. Roads needed building, fleets needed supplying, and the crown sought strength that exceeded its coffers. Taxes arrived too slowly, silver weighed too much, and debt felt like a rope tightening around the state. So the court looked elsewhere, toward a rising class of financiers who were neither noble nor powerful in the old sense. But they understood something few others did: numbers could command loyalty just as effectively as crowns. The bank they formed did not look extraordinary at first. It started with a ledger, a handful of backers, and a bold idea. Money could move without metal. Credit could stand in place of coins. And trust, carefully cultivated, fiercely protected, could become the kingdom's unseen foundation. At first, officials scoffed, whispering that such a system was too delicate, too abstract, too dangerous. Yet the kingdom had no better option, and necessity has a way of turning doubt into permission. As the institution grew, so did its influence. Merchants began relying on its notes. Ports filled with ships funded by its advances. The crown itself leaned on the bank's quiet machinery, drawing strength from a network of obligations invisible to ordinary citizens. Still, beneath the early success, an uneasy truth lingered. Power built on trust can rise quickly, but it can falter just as fast. And in the shadows, those who resented the new order waited. They saw a bank shaping decisions once reserved for rulers. They watched influence shift from thrones to desks lined with ink and parchment. They wondered what would happen if the balance tipped too far, if trust thinned, if one misstep sent the whole system trembling. Because every kingdom, no matter how proud, eventually asks the same question: who truly holds its future, the sovereign, or the stewards of its money? The bank's rise continued quietly at first, marked not by grand declarations but by subtle shifts that only the attentive noticed. Traders who once carried chests of silver now carried slips of paper bearing the institution's seal. Those slips could be redeemed, transferred, even pledged as security for ventures that stretched across borders. What began as a convenience soon became a necessity, and necessity transformed the bank into the kingdom's beating financial heart. Yet success attracted scrutiny. Rival factions within the court whispered that the crown had surrendered too much power. Old families resented how quickly these financiers had woven themselves into the machinery of governance. They feared that influence once anchored in land and lineage was being replaced by something far more elusive: mathematical certainty and institutional trust. But the kingdom pressed on, convinced this new engine would propel it forward. As revenues stabilized, the bank dared to experiment. It introduced new methods to manage the kingdom's debt, smoothing the shocks that had once left the treasury gasping. Soldiers were paid on time. Construction projects gained momentum. For a brief moment, optimism floated through the capital. People believed the bank's innovations could insulate the nation from the chaos sweeping Europe. But beneath the surface, tension brewed. A few unexpected defaults overseas sent tremors through foreign markets. The bank, now deeply connected to those markets, felt the vibration. Some of its notes began circulating farther than intended, creating webs of obligation that stretched thin across distant ports. The institution's leaders insisted everything remained under control, but their confidence masked a growing unease. Inside the bank's vaulted rooms, advisors debated late into the night. Should they pull back, letting the kingdom's ambitions shrink with them? Or should they double down, asserting the power they had spent decades building? Each path carried risk, and each risk threatened the stability they had promised to protect. Meanwhile, the court sensed vulnerability. Ministers who had once embraced the bank's expertise now questioned its judgment. Why had the institution reached so far beyond the kingdom's borders? Why had it tied itself to markets no monarch could influence? And then came the whisper that unsettled everything: if trust in the bank faltered, the entire kingdom might follow. It was no longer a matter of accounting, no longer a debate over strategy. It was a slow, creeping realization that the nation's prosperity now rested on an untested foundation, one that could shift beneath them at any moment. As foreign markets continued to wobble, the bank's leaders faced a truth they had long tried to avoid. Their institution had grown too deeply intertwined with forces they could not command. Notes that once flowed smoothly through the kingdom now hesitated in the hands of merchants. Rumors of instability drifted across taverns and trade halls, whispered not with panic but with a quiet, corrosive doubt. And doubt, in finance, spreads faster than any decree can contain. Inside the council chamber, debates fractured along fault lines that had been invisible during years of prosperity. Senior advisors pleaded for caution, urging the bank to shrink its liabilities and fortify its reserves. Younger strategists argued that retreating now would signal weakness and trigger the very crisis they feared. Both sides understood the stakes. If confidence cracked, even slightly, the delicate architecture supporting the kingdom's finances could collapse. The conflict soon reached the court. Ministers demanded answers the bank could not provide. How much risk had been taken? How many obligations lay hidden behind layers of credit? How long could the institution withstand pressure from panicked investors abroad? No reply soothed them. The crown, once grateful for the bank's ingenuity, now sensed its authority slipping into the hands of forces it barely understood. Merchants began refusing certain notes, not out of rebellion but out of caution. Some demanded payment in metal again, insisting that only silver or gold could steady their nerves. This shift sent shockwaves through the capital. The bank's promise that trust alone could move wealth seemed to tremble. Each refusal hinted at a fracture, each hesitation added weight to the growing fear that the system was more fragile than anyone had admitted. Within the bank, tension hardened into desperation. Executives raced to secure emergency loans, pledging assets that had once been considered untouchable. But foreign partners, sensing weakness, offered harsh terms or turned away entirely. The institution found itself fighting on multiple fronts: against markets, against rumors, against the clock. Then came the moment no one expected. A prominent trading house, long supported by the bank's credit, abruptly failed. Its collapse sent a cascade through interconnected accounts, revealing vulnerabilities carefully hidden under years of expansion. Suddenly the kingdom saw the truth: the bank had built a vast web of obligations, and every thread now strained under the weight of uncertainty. Fear rippled outward. Crowds gathered outside branches not yet to withdraw, but to understand. Their questions carried more dread than anger. Had the system grown too large? Had ambition outpaced reality? Had the architects of this new financial world pushed too far, too fast? The bank's leaders, exhausted and divided, prepared for consequences they could no longer outrun. And as night settled over the capital, one unsettling realization took hold: the crisis was no longer approaching. It was already here, unfolding in silence, waiting for the moment when the first thread finally snapped. Panic arrived not with shouts but with stillness. Merchants paused their trades. Courtiers halted their plans. Even the bustling markets felt subdued, as if the entire kingdom was holding its breath. Everyone sensed that the balance had shifted. The bank that once seemed invincible now stood exposed, its influence laid bare in the harsh light of doubt. In a final attempt to restore confidence, the crown summoned the bank's leaders to an emergency council. The discussion unfolded behind closed doors, but its tension seeped through the palace walls. The sovereign demanded stability. Advisors demanded clarity. And the bank demanded time it no longer truly possessed. Numbers were recited, pledges made, assurances repeated, yet none carried the weight needed to calm a kingdom on edge. Then, as the meeting stretched into the night, the truth emerged. The collapse of the trading house had triggered hidden obligations far larger than expected. Backed by the bank, guaranteed by its credit, those obligations now threatened to swallow its reserves. The council fell silent. Every person in the room understood the gravity of what they heard. A single institution had grown so powerful, so central, that its weakness imperiled the nation itself. But not all was lost. Amid the gloom, a proposal surfaced, one that demanded sacrifice from the crown and discipline from the bank. The kingdom would inject emergency capital, stabilizing the institution long enough to weather the storm. In return, the bank would surrender the independence it had quietly accumulated over decades. Its rules, once crafted behind closed doors, would now answer to the crown. Its influence would be watched, measured, restrained. The decision was painful, but it became the turning point. As dawn broke, the announcement spread through the capital: the bank would survive, but under new guardianship. Markets steadied. Merchants resumed their trade. Citizens felt the knot of fear loosen, replaced by a cautious, lingering relief. The crisis had not vanished, but the descent had been halted. And in that moment, the kingdom learned an enduring truth. Power built on trust must remain accountable, for unchecked ambition can reshape a nation just as decisively as war or decree. Banks may serve crowns, but crowns must guide them lest the flow of money become a tide that sweeps beyond all control. What unfolded within that kingdom is not merely a relic of history. Its lesson breathes through every debate over financial oversight, every rescue of an institution deemed too central to fail. The past whispers a reminder: stability is not a guarantee, but a negotiation renewed in every era. Subscribe to join the journey.